it's Rob from Property Investments UK, and in today's video we're going to be looking at how rental guarantees can work with investment properties, specifically serviced accommodation, and how strong are they, what you should kind of consider and look for when it comes to rental guarantees. Now, the beauty about property investments is there's loads of different options, loads of different strategies you can kind of consider. Everything from a straightforward vanilla buy-to-let all the way through to even a hotel investment or care home, HMOs, and also serviced accommodation. And some of those models come with rental guarantees. But there's some, I suppose, misconception about what guarantees offer, what they cover, and also who's actually paying for them. Is it an insurance product? Is it the developer that's guaranteeing it? Or is it a letting agent, effectively, that's kind of underwriting that guarantee?
Yeah.
There's very different reasons as to why some of them are valuable and some of them kind of aren't as well, I think, Paul. Like, from you guys, obviously, because you have the letting backgrounds, you look at guarantees from a slightly different aspect, I think, than what a developer might do.
Yeah.
Because we've looked at sites before, like some developments and stuff we kind of see behind us now, where it's a resale agent might be selling it and saying, look, here's a one-bedroom property you can buy, and the developer is underwriting a guarantee for the next 3 years. Well, that's great, but sometimes that guarantee is because when you're buying the property, you're just paying a slight premium, and you're ultimately covering that risk element.
Yeah.
Because the developer's selling that property. But I suppose from a lettings point of view, you guys look at it different because you're underwriting the guarantee. So if you're only going to do that on properties that you know are effectively going to let.
Yeah, well, that's the idea. Yeah,
Yeah.
It's I mean, obviously there are lots of products. You know, whether it's a buy-to-let with a rental guarantee or the purpose-built student offer rental guarantees.
Yeah.
Now, a lot of the conception is that it is priced into it, or what they're making out of it. How can they do this, etc. How is it guaranteed?
Yeah.
And yeah, I suppose in theory some of them points are correct. It can be. And you've also got to make sure that the rental guarantee justifies that once that rental guarantee ends, that is a true reflection of the rental you're going to get. Because the last thing you want is to be told on a buy-to-let with a student getting 6 or 10% and then find out that after that guarantee runs out, you're actually on 5 or 6%.
Yeah.
So that's
they
a
market,
bit
the headline figure is we'll give you a guaranteed rent of, as you said, 7%, but then the local market doesn't actually sustain that type of rental.
No, absolutely. So, it was good for the time being. And if for any reason the developer or the management guarantee, anything happens to those, then you lose your guarantee because that's who is with them. And I suppose fundamentally that would be the same. But what we base it on is that the price is the price as it was.
Yeah.
The price is not included in the guarantee. The guarantee is not mentioned anywhere with any lease or contracts to do with purchasing your property.
So you get to consider that as an asset on its own. Do those figures work? Does that price of the property
That is price as it was,
Does the local market rent work, and you decide on that?
Yeah, there's not 18% on top because we have to incorporate some rental guarantees.
Yeah.
We base our rental guarantees on our experience, on what we can achieve and what we've done in the areas and what we're being told we can achieve. So we will then put in, certainly not over exuberant, but a fair rental guarantee and say, right, we know that we expect, based on the percentage or the occupancy that we've had or the occupancy we're running on, that we can achieve X% on this based on 70% occupancy. If that's the case, we want to make a little bit out of it. Obviously, we can pay these bills and we can offer that rental guarantee of 6%, and that will come from ourselves directly every month. So it's based on knowledge and it's based on expectations of what we are told we can achieve, our suppliers are willing to pay, etc. So it's not anything to do with the price of the property. It's just based on what we expect on return. So it is very different. I guess it's based on facts, not just on a piece of paper.
And I think that's important, because if you're trying to analyse that deal, like sometimes you can look at property deals and try and compare kind of apples for apples, and the guarantee might swing it in one way or another. But if you don't know where that guarantee is coming from and how it's underwritten, whether it's the developer, whether it's an insurance product or the letting agent, then you might get a misconception as to what that deal really looks like.
And you've got to think of it we think every relationship we enter, we want it to be a long-term relationship. And I suppose if we wanted to go down the route of flowering it up, I suppose we could say, right, we'll give you 8% rental guarantee and look after everything, and then it looks an incredible deal. But there's no point in us offering 8% and paying all costs and not making it work. Because that's not good for anyone at the end of the day. So what we will do, we'll say it will generally always be above. That's one thing we will guarantee, that if you went on a normal ST and you got the normal market rate, after all your costs, it will be above that. Might not be by a great deal, but it will be above that. And that takes any risk of voids out. It takes all the hassle out for you, takes everything out. You are literally getting a guarantee for doing nothing at the end of the day. But we base it on the knowledge that we have and the experience that we have, which again is probably going back to one of the reasons why everyone can't do it, because we do it and the revenue share, that's it, is risk reward, but we also know that works, but we do offer people that option.
Yeah, and I think if a developer can't do it because they don't necessarily have the systems in place to
do it,
back up that guarantee. So they can offer a guarantee based on the price, and they maybe sell it as like premium, but if it's coming in from, I think, the letting agent, the guarantee is based on what the rental market is physically going to do rather than the price.
With a letting agent, if a developer gave a normal guarantee or a letting agent gave a normal guarantee, it's like I said before, they'll probably give you 75% of what they know they can achieve.
Yeah.
That will cover themselves. So let's say a flat would be 5% net you would achieve after all costs. They will probably give 4 as a rental guarantee. Below market rent, but it's guaranteed. Through the service model, because we can charge the higher rates and the higher weekly, monthly rates, we usually a percent above.
Fantastic.
So it's a win-win for everyone.
Brilliant. So that's why guarantees are common when it comes to kind of property investments. Depends on the strategy development you're kind of looking at. You will get some rental guarantees offered with products, but it might be from the developer, it might be from an insurance product, or it might be from the kind of letting agent. And it's just a case of trying to understand the context. Who's offering it? What is the reality? Like, how strong is that guarantee backed up? But also from the point of view is, as Paul was saying, really, when that rental ends, what is the local market? Will it sustain that type of rental tenant profile, rental income, all that kind of good stuff? So there's a couple of things to kind of consider there, but hopefully that just gives you some background as to how rental guarantees can kind of work on your investment projects, properties, and also from the point of view of serviced accommodation. Thank you for watching this video. If you like this content and you'd like to join our free online property training course, we've got a link for it on this page. And in there we cover a range of different property strategies to help you get started, either building a long-term property portfolio or creating a cash-flowing property business. We also look at ways to increase your return on investment with any of the properties you may be considering. And we also have a couple of cheat sheets and downloadable documents in there as well. Simply click on the link to join the free training course today.